Good morning. My name is Ian Laverty. I'm the Chief Operating Officer at Coriolis Technologies. This panel discussion is one of a number of events that make up Coriolis's Future of Strategy Week. Indeed, this panel just about marks the halfway point in that week. This week is the Future Strategy Week is a series of discussions, webinars, panel discussions, fireside debates around these subject trade and trade finance, with a particular focus on sustainability running alongside COP26. I'm delighted to be joined in this panel discussion. This one is Ask a Banker, an opportunity to ask a bank how they support through initiatives and through other support mechanisms businesses to identify and exploit import and export opportunities. I'm joined by Sam Riordan of Lloyds Banking Group, Colin Walls of Lloyds Banking Group, and Tom Stoddart of Lloyds Banking Group. And I'll have the panel introduce themselves in a second. And I'm particularly pleased to see that we're joined by Joe Gorman, Christine Torrey, and Mark Cootie of MacIntyre Chocolate Systems, one of Scotland's successful exporting businesses. This is a Q&A discussion, so we welcome questions from you, the audience. The chat is open, so while you're thinking about which questions you might want to ask the panel, can I get the panel to introduce itself? Sam, can I come to you first?
Yeah, good morning, everyone. Hello, Sam Riordan. I head up proposition development and innovation within the commercial bank at Lloyds Banking Group, and I support SMEs through my day job through the creation of new tools, new capabilities, new digital propositions that can enhance and improve the overall client offering. With a great focus on data, trading internationally, to name a few things.
Very good. Tom, can I come to you next?
Well, thank you, Ian. Good morning, everybody. My name is Tom Stoddart. I run the Treasury Services sales business for the SME mid-corporate franchise within commercial at Lloyds Bank. So what does that really mean? So that is looking after the risk management needs of our customers from a liquidity, from a foreign exchange risk management, from an interest rate risk management, and also commodity risk management perspective. So busy times at the moment. We look after three major asset classes, and all three are very volatile.
Tom, thank you. And Colin, can I come to you next? And at the end of that, can you introduce our guest business as a client of yours as well, please? You're on mute, Colin. Sorry.
Yeah.
Good start. Old men with technology is never good, so apologies. So thank you, Ian, and good morning to everyone. My name is Colin Walls. I'm the Regional Director for Global Trade. I look after Scotland and the northwest of England, covering both our Bank of Scotland brands and also for the northwest of England for Lloyds Bank. In my role, I work with our clients to help support their wider working capital needs, but with a very big focus on international trade, which obviously involves not just the exporting side, but for importing clients as well. And in the role that I have, this is not about selling product. This is about trying to really add value to businesses in thinking about how they operate in international markets, how they interact with third-party suppliers or buyers at that end, and really try and add value and make sure that clients are working with the most optimal structures that they can. Obviously a huge amount going on in the back of Brexit at the moment, particularly from a year or two ago, with all the supply chain issues. So it's not always necessarily about price, it's about supply chain, logistics, and so on. So it's a much more wide-ranging role than just the usual letters of credit and guarantees and so on. So I'd also like to introduce Joe and the team from MacIntyre Chocolate Systems. I've been working with them, really covering all of the things I've just talked about and how we support their exporting journey. They're a very established exporter, but I'll let Joe and the team talk a little bit more about that.
Hi everybody, yeah, Joe Gorman. I'm the Managing Director for MacIntyre Chocolate Systems. Been with the company since March 2017, and since then we've seen quite a radical change internally in terms of our process and our systems, in terms of manufacturing. The company was formerly known as Lone Duff Developments, and we've always been situated here on the east coast of Scotland. We've been in this site now in Arbroath for around about 22 years. But yeah, between Dundee, Carnoustie and Arbroath has been our kind of general area of operation. Formerly, as I said, it was formerly known as Loanduff Developments. It was a single family owner. Stuart Anderson, he was the primary owner. And the inception was in 1974. And we've always been in the confectionery, chocolate markets in terms of manufacturing, design and machinery for those markets. Yes, I would probably say we are probably 98-99% export of our business, and we are in 109 countries globally with our product. So yeah, emphasis for us is very much export. UK and Ireland is a very good installed base home market, and funny enough, this year it has been growing. But traditionally, we are seeing the exports of it as our main focus and main core. We are a market leader. Our product, MacIntyre Refiner Conch, is a brand leader, market leader. And as I said, we were 2013 is when the Probat von Gimborn, based in Emmerich, bought the Loanduff development group, and we became part of the guys. We changed the name to MacIntyre Chocolate Systems in September 2018, and we are now known as MacIntyre Chocolate Systems. So no more reference to, as we were known as in the trade, as LADCO, an abbreviation of Loanduff Developments. We have sister companies within our group. So HDM is in Dresden, Bauermeister is in Hamburg, and that kind of forms the chocolate division side of Probat. So we're one of, I think, 17 entities within the Probat group. So yeah, we're classed as an SME, but we're also classed as a bigger company because of the Probat group. So there's a bit of always a bit of debate with me and Scottish Enterprise regarding that. So that's kind of us. We've got 48 head count here. We are single owners of this site, and we've got a full turnkey operation of manufacturing, so fabrication, welding, CNC machining, and mechanical and electrical assembly. We have a full engineering team, mechanical and electrical, and we're supported by internal sales team and an external sales team. So they're based in Australia, York, and here in Arbroath. We're also supported by an agent network throughout the globe, and it's quite vast agent network. And yeah, Colin, he's been supporting us recently on how we grow our export and international trade.
That's great, Joe, and a fantastic introduction, and sets the context for the business very well for our audience. Following on from that, and you were just on to talk about Colin and the relationship you have with Colin. Can you give us a bit of a summary or an overview of how you work with Lloyds Banking Group and what the bank does to support your export activities? How does that relationship work from your perspective?
Yeah, so we have a regional bank manager who from Bank of Scotland, so he does all the day-to-day business, and Mark, who's new to the business, so that's a relationship they have. And what we see as Bank of Scotland is since we moved from the Clydesdale Bank, which was the previous bank, and that kind of just happened when I joined the business. The Bank of Scotland has been very, very supportive in MacIntyre. So the day-to-day running of the business has been really supported. And also when we've called for any CapEx, so that has also been supported as well, because we've had investment on some new machinery, and we're looking to continue that through some asset financing for some new CNC machines, which the bank has always supported. So we've had that facility. Group has just not ticked that box and allowed us to proceed with that. So we know the support is there, and it's been very good. And it was also very good through the, although we didn't call on it, but we knew it was there, and it was very good through the whole start of the pandemic. So that support we knew was very much there. So the loans that were available, everything, it was very crystal clear in terms of what was available to MacIntyre, but we didn't actually need to call upon it just because we were in a good financial state at the time. So yeah, the support from the Bank of Scotland has been very, very good. And now we're at the next stage with Colin, which we see new development for MacIntyre.
Very good. And Colin, from your perspective, you're obviously front and central in this relationship. How does that relationship work internally within the bank? How many people are involved in that team, and how do they interact with you and with the business behind the scenes?
So I think the way that we try and operate, Ian, is make sure we've got really good quality people that are the key relationship managers. So Joe mentioned there about Mark, who looks after our Fife business, and what we have to do is, so if you like, as a product specialist, so it might be for me in trade, it might have some guys that look after invoice finance, receivables funding, it might be HP and leasing, any number of specialist areas, obviously the cards, particularly working closely with me on the Treasury side for, particularly FX risk management and so on. And Mark will work very closely with the likes of Joe and Mark Cootie that are on here, and then bring us in a specialist when needed. And the conversations that I've been having have been very kind of holistic. We've not been brought in here because MacIntyres have a specific problem. It's because we want to explore the ways that we as a bank can add value to their business. And I think that's what's absolutely crucial, is that as a bank, we're not sitting here looking to try and push products onto clients. I guess go back to 2008, a lot of banks kind of got in that space. And now it's got to be about being a trusted partner, about trying to add value. And, in due course, as Joe and the team go forward, clearly as a bank, we've got product support that, and we'll be there to execute those. But you've got to get that relationship right first and make sure that the client understands we're trying to add value, and give optionality is my keyword, and hopefully Joe this resonates, but it's trying to give the business more options 100%. To manage their cash flow, manage the cash flow, and in some of the stuff we're talking about, actually improve the margins in the business that you do by how you structure those trades.
Yeah, I would 100% agree on that.
Excellent. And Colin, how do you as an organisation identify clients who have the potential to export? Do you proactively manage those relationships and encourage them, or do you wait for businesses to approach you? And whether it's proactive or reactive, what are the biggest challenges that those organisations usually face if they're new to exporting?
So I think, first of all, how we interact with them. There will always be stuff that comes left field, and you have to kind of react to that and be as active as you possibly can. But where we possibly can, it's that proactive element, and that's particularly key. I mean, I guess in any part of our business, but particularly in my world, it's key to be talking to our clients early in the process. And I think as a bank, very often we're kind of restricted. Often, Ian, is that businesses will often go away and they will put contracts together and put their structures together, and then maybe come to the bank and say, hold on a minute, we've got a funding gap. And actually we might have some risks here, and how are we going to manage these? And that's more challenging for us because it really limits our options. One, it gives us a lot less time to put solutions in place, but also these contracts and structures have already been agreed with, those counterparties, whether it's on supply chain or whether it's with their customers on the selling side. If we can get into that dialogue early, now either we've got a great relationship with like Joe and the team, I kind of know that if they've got a contract coming up quite early, hopefully they'll say, we'll talk to Colin, let's see if you can add some value to this. We won't try to second guess where we'll help. We're just having a more holistic conversation first. So that's why it's important for us as a bank to try and be proactive ourselves. We've got lots of trigger areas. We kind of look at clients and we understand their payment flows in and out. We can start to see what kind of risks they have in those structures, what working capital gaps they might have. And we've got to take those conversations to businesses early in the process. Now, that's how we run our relationships with clients, but I think that takes us on nicely to the second part of your question, which is, what are the challenges? And particularly for the SME market, rather than kind of large corporates, if you kind of compare the challenges in different sectors, because it's very different. Yep. With SMEs particularly, it's about getting into understanding the opportunities, particularly if they've not exported before, the planning that goes into it and the time that needs to be invested in understanding those markets, the potential markets, scoping out where you go. I mean, the world's still a big place. I mean, we've really shrunk it down over years, right? But it's still a big, big place. So you take your product, where do you put it into? And I think for SMEs, I think it's one of capacity for them, particularly a lot of owner-managed business. You think about it, you're working domestically, you're investing a huge amount of time just keeping your day-to-day business going. To take some time out to really scope out the opportunity on an export market, to try and think about setting some sort of strategy about how you go after it, which country should we go into. One of the things I talk about quite a lot, particularly up here in Scotland, but I think it's a UK one generally, is we sometimes undersell ourselves as a nation in our reputation globally. And that reputation, I think very often, it's one of quality, but it's about, when I look at successful businesses, and actually MacIntyre's is a classic one here, right? What a fantastic exporter. Not everyone knows the name, but they're an amazing, amazing business when you start looking at them. And that's because they've got a niche. And I find successful businesses have found a niche somewhere. And either that's a niche with their product or their service, or sometimes it's a niche in a market. It's like going to China. We all know some of these cities in China have got 10, 20, 30 million people in them, so there's the size of a whole country in one city. So you don't go for whole China. And actually, even if you go for one city in China, everyone else is in there as well. So trying to make yourself stand out, particularly as a small SME, I think is absolutely key. Find your niche, and that's where you'll find your value.
Excellent. Joe, if I can come back to you, you mentioned early on that you have sales offices in Australia, York, and Arbroath. So I guess North and Southern Hemisphere. And you said 98% of your sales are export sales, which is fantastic. And I would imagine that's significantly higher than most SME businesses.
Yep.
How do you identify new markets and new customers, particularly overseas markets? And then how do you put together a business case to work with the bank to help finance that?
Okay, so the areas, it's actually area sales managers, Ian. So forgive me if that came across wrong. So we, as the guy that we have in Australia, so he covers that whole Australasia side of it, and then he is an agent network that reports to him. Yeah, so he's constantly developing the business there. Yeah, and it's the same for the guy. Believe it or not, the guy in York, he actually looks after South America, Latin America, North America, and Canada. So he's got that whole side of it. Yeah, and Arbroath, we have one lady who looks after the whole of Europe and the UK, and then we have the central team, so which supports that. So all of those areas have predominantly an agent in it of some description. So that could be an agent that will be directly for MacIntyre, or it will be a group agent. Yeah. And some of these agents also have the ability for mechanical and electrical service and installation, yeah, which supports MacIntyre as well. So we create our marketing strategy, yeah, for target areas which we're still very strong in, and or areas that we are weak in. Maybe it's because competitor is there with a different technology, and that's currently what MacIntyre are doing at the minute, because we've come through a big innovation change with our machine, and it's now allowing us to attack the competitor, who is based in, two of them are based in Holland, one of them based in Switzerland, and the rest is Chinese, in terms of copies. So we have got clear focus in terms of where we see growth in these areas. Where the bank comes in is, the bank is now, for a different strategy, opened up the letter of credit facility. So that letter of credit facility, and especially being a deferred letter of credit facility, has now allowed MacIntyre to potentially speak to existing customers who have got aging assets. Now, the MacIntyre, we've MacIntyres in the field that are running for 30, 40 years. Yeah. And it's just a service and spares relationship we have with those customers. But in terms of changing, getting them to change and invest in new assets, they may not always have the capex and funding available. So this change to the LC, because we deal with LCs and bank guarantees near enough every week, but this change to the LC that Colin is made us aware of is now, believe it or not, we've only been speaking, Colin, again 2-3 weeks. It's gained a tremendous amount of interest from customers in countries where we know the economy is not very good. So I'll give you an example. South Africa, we've really got a big installed base there, but we know the economy isn't great at the minute for major capex investment, but now it's generating that interest. Yeah, so that wasn't on our radar previously in terms of getting that sort of sales there, but now it is. So we see the support from the bank, and again, what is available to us that can enhance our capability to generate new sales. Yeah, so that's where I see it. You know what I mean?
So a couple of questions that lend themselves to Tom, if I can come to you. Obviously, each of those markets and new markets comes with its own risks, and you and your team help businesses to identify, analyze, and manage those risks. What are the services that you provide to businesses, Tom, and how does that work in its interaction with the businesses?
Thanks, Ian. Well, I think Colin makes a very good point earlier on, is that the product pushing for established organisations are long gone. I think we've always prided ourselves in being risk managers and being permanent risk managers with our clients. So what's that really about? So it's making sure that we really understand our clients' needs, understanding, I think Colin makes this point very well earlier on, having that long-term sustainable relationship such that whether a customer be exporting for the first time or a regular exporter, really understanding how financial market moves manifest themselves as risks within their business. Because ultimately, we are there to help customers maintain their gross and net margins. So that could be a exporter who is receiving foreign currencies, who reports in sterling. That could be somebody who is exposed to shipping costs, which have certainly spiraled over the last couple of years. I think it's been certainly very well documented. The supply chain squeeze, understanding how customers maintain their relationships with their suppliers, really understanding the supply chain all the way through, and then unpicking the severity to which a large foreign exchange move, for example, or a large bunker fuel move would affect those gross margins. And understanding, the hottest topic of all time at the moment is the inflation story. How much volatility in those asset classes in financial markets can a business sustain? How much can it pass on to its customer base in terms of the cost pressures that customers are under at the moment? And then once we've analysed that and quantified it, put in risk management strategies to be able to mitigate those risks. Now, whether that be basic forward contracts and foreign exchange in order to fix those margins, whether that be looking at interest rate risk management, which is a huge topic for us at the moment, particularly after the Bank of England didn't have to throw the market last Thursday, as well as, it's been well documented. Look at oil prices, look at customers who are running their own logistics, or logistics firms who are very concerned about the diesel price at the moment, because as a derivative of oil prices have certainly increased significantly. OPEC plus, again, it's been well documented. And then interest rates, so the inflation story, because at the moment we're speaking to so many SME clients who are saying, hang on, let me get this straight. My shipping costs have gone up, my supply chain has been squeezed, I'm finding it hard to get skilled staff. So from an income statement perspective, pretty much every cost that I face has gone up. And now on the other side, you're suggesting that you're going to increase my debt costs as well. So that also, from a relationship perspective, is not just about leaping straight towards the risk management strategies, but also using our economics team and we've just come off a call this morning with about 200 clients on trying to unpick that inflation story, which is our clients are saying, is the economy really overheating? No, I don't think it is. So why is there so much pressure over the Bank of England, why are markets anticipating interest rate rises to counteract this inflation story. So unpicking the global macro and political economic events, understanding how they manifest as risks within our customers, businesses, understanding the flexibility in terms of supply chain relationships and passing on costs to customers, bucketing all of that, understanding the extremities of that, and then putting in risk management strategies to mitigate those for sustainable gross margins on an ongoing basis is apologies Ian, very long answer to the question of what we do and how we help our customers.
No, but it's a fantastic answer, Tom, and in fact it's the same space that Coriolis Technologies itself is in terms of helping businesses to understand risks, geopolitical, economic, market risks. And I've just, for the audience, I've just popped a link into one of the platforms that we offer to businesses. You can go along and have a free trial of that. Tom, it's clear from that there's a wealth of experience and expertise that goes on behind the scenes that businesses don't necessarily have direct access to, but that feeds into the services that you offer to the banks directly. And Sam, if I can come to you, Joe mentioned one of the ways that you help the business there with a letter of credit, a deferred letter of credit at that. The expertise and the experience that Tom talks about there and the teams within the bank behind the scenes, that feeds into the product. What are the main products that banks offer to businesses to help them with their import and export activity?
So thinking about a business and its kind of trading cycle, we think about it through the kind of working capital flows, be that paying your suppliers, be that holding inventory, and be that getting paid yourself. So we step through that cycle with clients. We understand the pinch points, and we do that through our working capital management tool with our relationship managers and our trade relationship directors. And what that helps unpick and identify is areas where you are best in class, areas where you can improve, and areas where you benchmark, better or worse than peers. And actually understanding what those marginal gains could be across those cycles is where we identify product opportunities. So throughout that life cycle, it could start with CapEx, and I know Joe talked about asset finance to help for the investment in machinery, stock, equipment. We can both help the funding of that asset itself, but also the kind of bridging funding to ship that asset from an overseas country to the UK. So something like capital import finance. We obviously help with risk management, like Tom talked about, be that trading risk management. So actually mitigating the risk of entering into a new relationship with a supplier. You may or may not want to pay in advance payment, they may want to. So we offer trade instruments that can help in that space. Or it may be you pay on open account, and actually we may offer you on the other side, therefore, the ability to finance receivables and invoices, etc. So we basically help, as I said, from the purchasing of the good to put into your commodity or whatever you're creating, through to the time you hold that, through to the time you get paid from your customer. And it's really important that we are able to offer both financing, risk management, and basic payment and collection facilities to help you both in your local currency, but also overseas as well.
Fantastic. So I'm the managing director of a business, and I'm interested in exporting. And Colin, I think this one's coming your way. Having an understanding of some of those products and services that Sam's outlined there, I want to start working with the bank. Now, I'm a client of yours, so you're probably familiar with my organization already. But if I want to start exporting, I want to start looking at an application for some of these products or getting support from the bank. What does that process actually look like from the business's perspective? And what can the business do to help itself or to help you help the organization as well? What do you look for from the business?
Yeah, so I guess maybe just probably touch on a couple of themes I mentioned earlier on, Ian. I think the first thing is start the process early, because often we're very time constrained, and that always really kind of limits what we can do. It puts us under pressure. It's not so much us under pressure, the bank, but it's going to put your business under pressure if we're really struggling to kind of meet a solution where you've got a live contract or whatever it might be. So start the dialogue early. That gives us a chance to, first of all, before we even think about those products, let's make sure we have the dialogue to support you in that thought process. So I would always, even if you came to me and said, Colin, we've got this export contract, this is what we need to do for it. We need a guarantee or we need something else. I'd always want, as long as you were agreeable, of course, but I'd always want to take a little bit of step back first and go, right, let's understand the whole end-to-end working capital of that contract or the end-to-end working capital cycle of your business. And really just to kind of explore to make sure we're not missing any alternative options. And I've worked with some of the largest businesses, and particularly in the oil and gas sector, up in the northeast, given I'm Scottish based. And that's been interesting because a lot of those businesses have got in a very transactional mode. And they will just say, this is how we've operated for the last 20, 30 years. This is what we need, just go and get it for me. And I think where we try and differentiate ourselves as a bank is to try our best to take the business back a little bit, take a step back and talk through, one, what are the risks that the business perceives it has through that cycle? And two, where they see the funding gaps they have throughout their business or for a particular contract, and try and give you that optionality. So I guess I cover that off first, because what a customer always come to us with isn't necessarily always the best option. So once you've been through that initial process and we've gone, right, look, we're all in agreement here that for the business, and it's not for me to say what's the right thing, by the way. So if I'm talking to Joe and the team, if Joe says, that's great, love all the options, Colin, but we're back to what we originally wanted, great. As long as we've stress tested the need for that, yep, we're then going to we'll get that in place. And it really depends on, I guess, where the business is in its cycle and the maturity of itself. So established businesses, such as MacIntyre Chocolate Systems, we know well, we have all the MI that we need on this. So really, it's a fairly straightforward process for us to engage with our credit teams. So a lot of the solutions that we'll have would require bank limits that we would need to engage with our credit teams on, and that's the elephant in the room. Very often when you're talking to banks, is we need to have the appetite, the risk appetite to support the client, and the assessment of that's key. So as much good quality information as possible. Established businesses, really it's just maybe updating what we have, making sure we have all the facts on the transactions. For maybe new to bank customers or businesses who've not exported before, then it might be helpful to have maybe a more robust business plan around certainly where it's new plans, so if I'm sitting in our credit team looking at a business who wants to do something that they've never done before, I want to see that this is kind of properly thought through. They've got a structure. We understand what the cash flows look like. So make sure that whatever we're approving from a credit perspective overlays neatly with the needs of the business. So we're doing the right thing to support the client, I guess. So getting that information in good shape, that's absolutely key to get that if we can. And then I think the other thing as well is sometimes, and we're talking about SMEs here, I'm maybe slightly going off tangent a little bit, but a lot of the SMEs that will come to us, one of the challenges that they'll often have is they'll tend to have, not always, but they will tend to have weaker balance sheets. Maybe the profitability is getting there, but it's kind of maybe weaker. Maybe they don't, the security that's available to banks. A lot of banks now will kind of like to see tangible security like property assets and so on. And the good thing about trade is often there's a lot more help available to a business that comes to us looking for export support than there sometimes is just when they deal domestically. And a classic one in that is that, that's where we would work and see where, the bank can't always maybe do it on its own. And do we need to work with partners? And I work very closely with UK Export Finance. So government agency. For older people like me, they might have, if they've not heard of UK Export Finance, they might know of the old ECGD business that there used to be. And effectively, that's where government provides support to banks to underpin the facilities that businesses need to export. And this is all really the push. I mean, it's great for our economy to see businesses exporting more and growing and developing that capability within our economy as a whole. And that's why the government wants to try and encourage those businesses. And where there is restriction on facilities that we as a bank can make available, they will give the banks up to 80% guarantee to help underpin the facilities we might need to put in place. And that can make the difference sometimes between us being able to get to credit and getting something credit approved, that without it, we might not be able to do at all, or we might have been able to get the client something, but the limit that we're able to get approved is not as high as your business really needs. And this is about capacity, right? So a little bit of facility is clearly better than nothing, but you want to take advantage of the opportunities that are out there. So working with the likes of UKEF to get you a bigger facility that sets you up properly, and you can now say, great, I'm now set up, we're going to go and do what we're good at, which is selling our product and selling our service and maximising our revenues, and importantly, our profitability and minimising our risks and all of that as well. So hopefully, and that kind of covers, I don't know if there's anything else I've missed in that.
It does, and we see a lot of research, and depending on which piece of research you look at, you see figures around $3.6 trillion for the trade finance gap, and that's businesses that could, inverted commas, should get access to trade finance, but typically, and they're typically SMEs, and SMEs tend to face more challenges in terms of getting the finance that they need. And you outlined a couple of the reasons why SMEs find it harder than some of the larger corporates.
Yeah, absolutely. Look, it's kind of a fact of it, and look, there are always going to be scenarios where it just becomes, you hit a brick wall and you can't support. But I think if we are having enough conversation, I think the biggest problem often is that businesses aren't getting talking to the right people, and therefore really kind of being as open-minded as to what help they need, because a business won't always know what the problem is, or if I've got a problem, who's going to answer that. And that's where banks have got a part to play. So ideally when someone comes to me, it's never a complete no. It's a, well, hopefully it's a yes, but if I can't give a yes, it's a, okay, how can we make this better? How can we bring partners in? And that might be the likes of UK Export Finance, as I say. So and I would stress here in the middle of this, there's a huge amount of support when you export, more than there probably is if you focus domestically entirely. So it's a really positive thing. A lot of people think, exporting is difficult. Yes, there are more risks there, but there are lots of ways. So, particularly Tom was talking earlier on some of the risk mitigation his team do. They do excellent work there. There's always an option to mitigate that risk. The prize is huge on exporting, but yes, you still need those limits in place. And we've got lots of partners that we work with. So I think kind of helping businesses broaden their networks by utilising or leveraging the network that I have or colleagues have, that's an added value that we as a bank try and bring to that relationship as well.
Excellent, Colin. And I'm going to take the opportunity to shamelessly plug one of the latest sessions on the Future of Strategy Week, which is looking at the support organisations that are there to help SMEs in their export activity. And there are members on that panel from some of the economic development agencies, so the likes of Scottish Enterprise, Invest Northern Ireland, Welsh Government, some of the local enterprise partnerships, DIT, etc. So you're absolutely right, Colin. There's a wealth of support organisations out there. Joe, if I can come back to yourself and your team, you talked about Colin making you aware of the deferred letter of credit facility, and Sam summarised some of the different products and services that are available to organisations to help their import and export activity. As an organisation, how do you decide which is the most appropriate product to use, if you like, or which the most appropriate services? There's lots of different structures of debt products there to help your working capital. So what are the factors that you all take into consideration? How do you choose internally within your organisation which of those to take?
Well, ultimately that's really driven by our group, Ian, because, and again, from an SME, if we were just now sole owners of MacIntyre Chocolate Systems, it would be a different question or a different answer. But because we're part of the ProBac group, all financial structure is really conducted by them. But regarding what we're doing at the minute with a letter of credit, it's a standard part of our process. So we don't really need group approval for that. The defer side of it is a new, it's new to us because we've never really dealt with that before. So Colin clearly explained everything for that, and obviously there's other members of the team with Colin who've been involved in that as well. So both Mark and myself are really up to speed now with that, and hopefully we've got a customer who's actually going to take that up. But for us, we really have to use the group approval process for that side of it.
Excellent, very good indeed. So This week, if I can change the subject slightly, this week and last week, there's been an awful lot of activity around COP26. And Tom, you mentioned some of the hot topics of current news agenda. Clearly, sustainability and COP26 is high on the news agenda as well. How do we think that environmental issues and sustainability issues are going to drive international trade, and how are they going to impact international trade and I guess the access to trade finance going forward? Tom, if I can come to you first on that one.
Of course, thanks, Ian. So the emphasis in both directions in terms of clients who are looking to take a more sustainable view in terms of how they run their businesses, but also how large banks, financial institutions, asset managers, etc., have carved out huge chunks of liquidity to focus specifically on the ESG agenda. And I mean, this isn't new. This is something we've been talking about for a long time. The good news is that it's been turbocharged by COP26. So you've had significant political figures, significant industry figures, all making the right noises in terms of the investment that needs to be carved out to deliver that. So it's not going to change overnight. So helping our customers, whether it be from an importing or exporting perspective, really understand the carbon footprint and helping them to drive efficiencies is very important from an ESG perspective, because this is only going in one direction, right?
Yep.
I suppose where I would place caution is that it can't be done overnight. Now, there need to be aggressive timelines to be able to meet the figures of 1.5 degrees centigrade. And I think that'll be well documented. I think the first draft of the discussion paper has been published this morning. However, it takes time. So we need to make sure that we're helping customers export in a more ESG friendly way, by really understanding, again, gathering all the information and using the expertise that we do have. Mind you, we're going to have to build out more of our own expertise over time, and we've built out our own divisions internally to make sure that we are there to help our customers. But those who are high energy users, those who are considered industries that are not the superstars from an environmental perspective, need time to transition, and therefore they need funding to transition. So understanding those timelines and being sympathetic towards that, but also making sure that we are pushing the agenda as hard as we possibly can, is the position we find ourselves from a group perspective for driving the sustainable agenda. But it's a topic that's already big, and I'm very pleased that it's been turbocharged by COP26 with senior figures, both politically and industry-wise, making some firm commitments.
Definitely. And Sam, you're obviously heavily involved in the product development side within the group. How do you see the need for monitoring and assessing ESG? How do you see that impacting the development of products going forward, and how you support businesses?
Yeah, I think it's huge. And I think it's the first big thing we have to tackle. So Tom kind of alluded to it, but data to understand the activities of the business, but not just stopping with their activities. It's the activities of their supply chain. It's the products involved in the components of the product they distribute and manufacture. It's the countries they trade with. And that's obviously why we've, Lloyds Banking Group joined the Kosmos Consortium as part of Coriolis, because we really care about this, and our CEO really cares about it. And we've made some big commitments this year, and I believe again we will do next year, around our targets to both finance green initiatives, but also to tackle kind of brown lending, and that data will be critical in understanding our portfolio and the risks that we have within it, and then the opportunities we have to contribute to that net zero reduction. How that plays through, I think, is once we have data and tracking and monitoring, we can then play that through into more accurate financing propositions for our clients. So we have something called the Clean Growth Finance Initiative already at Lloyds, which is broad. It gives clients the ability to access discounted lending, be that kind of more term lending, asset finance for capital expenditure, or even trade finance. And we're also now looking at supply chain finance as the next kind of phase, but actually driving that incentive to invest in green through a small margin reduction. and we have to start there because we have to start to drive the incentivization. But I imagine that incentivization will get bigger and bigger, and you could potentially see a world where you see the opposite, where funding is going into brown activities. There could be more punitive action. So that's still a long way away, but there are tools and financing mechanisms available now, which we are starting to see, good shoots of engagement from clients on around really focusing on investing and financing the right green activities.
And from the business's perspective, Joe, how do you find the need for monitoring your impact on the environment, sustainable sourcing? How do you see that impacting your own choices as a business, from which markets to develop and to sell to, where to source goods from, etc.? How does that impact both at a local level in our growth, but also from a group perspective as well, and what initiatives are going on in the group, and what pressure is there on yourselves?
Yeah, so from MacIntyre's perspective as a manufacturer, we're an engineering company ultimately. We've already started our roadmap to net zero, and we've engaged with Scottish Enterprise. And just so everyone's aware, we were quoted £20,000 for a consultant to take that process on. But with Scottish Enterprise, it's actually free. So it's actually quite good in terms of that. So we've created our own team, and we have already started that by changing forklifts from LPG to a different type of charging, electric charging. We've now changed to electric cars. We've already got hybrid cars, but now we're going to full electric. And we've given ourselves 5 years to try and get to net zero as quickly as we possibly can, because there's no point in doing the 50-year or whatever. I mean, I don't see the point of that. But for us, I think where we are at the minute, we can achieve that, and we can certainly get the tier 1 and tier 2 side of it quite quickly. I think the challenge for us is going to be the supply chain, because we buy locally. Know what I mean? So we can really look at that, and we can engage through our quality system, our BSI system that we do with suppliers, but it's the international suppliers that we have, and we do bring some stuff from mainland Europe, some of our steel, manganese steel, for instance. So locally, I think we'll achieve that quite. It's the international side of it where we'll need to have some more time in terms of getting the information regarding that. The impact from our machine, we actually started this before, and I'll use Tom's phrase there, the turbocharge side of it. We started this when I joined, because we actually never had a revision change on our machine since 1996. So when I joined, and I come from a different background, all to do with manufacturing, but I come from a different background. That's how I said we really have flipped the business, and we've really accelerated the almost to I4. We're almost at Industry 4.0 in terms of the capability of our machine now. And what that has done to our customer base is really reduced their cycle times, and it's also reduced their energy reduction. So we've already been engaging with customers globally of what's really important to them in terms of running a MacIntyre. So that's where we see our part of trying to really engage and reducing emissions and carbon footprint in terms of the operation of our machines.
Very good. I have to say, as a former consultant, I think I'd have been quite proud of myself to quote you 20 grand. I think I'd have been even prouder if I managed to convince you to part the cash and take it on.
Yeah. Well, honestly, the Scottish Enterprise. I mean, we engaged with them as well in terms of the roadmap, and it was a different question, because the question was all about the UN application, you know what I mean, for SMEs, and because we're part of the ProBac group, we've got to wait till group catches up with MacIntyre. We're always ahead of group, so yeah, we've got to wait for that group application. As I said, it doesn't stop us in our roadmap on our journey but we've got to do it through groups. So that was a learning for us in terms of being part of that.
Oh, excellent, Joe. And another good example of the support and from organisations that are there to
and vital at Scottish Enterprise, and again with the bank, very much pivotal, I think, to SMEs. I think, I mean, if I was speaking to a group of SMEs at the minute, really engage with Scottish Enterprise, because the funding that's available is really good, and we've really tapped into it, especially again for the past 3 years on the R&D side. So that's really helped our innovation, and that's really helped our journey to become now more reduction in cycle time and more energy efficient.
Excellent. We've only got a few minutes left, so there's a few questions have come in from the audience as well. So thank you very much for those, and keep them coming. I think this one is probably directed at a combination of Tom and Colin. So if I can start with this one. If I'm an SME but part of a very big supply chain, does this make my business more or less risky? And I guess that's talking about being part of a long chain where you've got dependencies on others. And does that make me a riskier proposition if I'm applying for finance or some kind of debt support?
Do you want me to pick that one up, Ian?
Yes, please, Colin.
So, yes, the quick answer is yes, it can do. And it's a really good question, because it's something we've not talked about much yet in the way, or I've certainly not talked much about how I support clients, because so far we've talked a lot about, say, how Joe and I have a conversation, and it feels quite internal looking in some ways, because it's about, MacIntyre's risks and MacIntyre's funding gap and all these sorts of things as well. But actually, the way that we can often add more value is we have to start thinking about the counterparts. So my rule is, once I can tick the box to say we've managed our customers' risk and funding, then what I'm trying to do is, the real way we can add value is, let's take a step back and think about what this transaction means in the supply chain, or further down the line on the sales cycle. And I think that's exactly the question that's been asked here, because you've got this long supply chain. And there's all sorts of risks in there, but also in the supply chain, there are often entities in there that have a much stronger balance sheets, much better credit ratings, and there are structures. So the things that we talked about with MacIntyre, for example, what I really love about those solutions is, if we can make this work, none of those solutions on the export side will need us as a bank to put limits in place for MacIntyres. And what we're kind of doing is transferring it on to buyers who have much bigger balance sheets. So for SMEs, there are sometimes options to do that. Well, how do you make that work? Well, what you've got to do is create added value in the supply chain. So in the one we've talked about with MacIntyres, it's about, okay, we've got an amazing product that MacIntyres have got. And MacIntyre's a brilliant business. Obviously not just saying that because the guys are here, but it's a really good business, a great product. And it will stand on its own 2 feet. So they will always sell that. But there are always businesses out there that need something a bit different. For example, if you are selling into a particular jurisdiction where the cost of capital is very high, then if they're having to finance their own working capital, and I know MacIntyre is a little bit more capex, but generally speaking, if it's working capital having to finance, the cost can be really super high there. If we can create a structure with that customer that allows them a much longer time to pay, but I can create a structure that allows my customer to get paid quickly, I'm trying to create a win-win. Tick the box for our customer, but create added value. So it's not just a great product, it's not just a great service, actually it has wrapped around it the working capital that customer needs. Or the other way with the supply chain, making sure that, and this was really crucial during the pandemic, I might add, a lot of trust was lost during the pandemic where people said, I'm just not going to pay my suppliers. Mm-hmm. And that started to break down in supply chains. And where we really tried to get into that conversation quickly was to say, wait a minute, let's think about your supplier here. I know you're trying to protect your cash. Let's find a structure that does that because you're my customer and that's my priority. But can we still get your supplier paid quickly? And if we can find, and this is where trade helps, typically those trade structures can't try to find a win-win for both parties. That was creating value for the supply chain. It was a secure transaction for the customer and the SME on the basis of the question here. It was taking that risk out, but it was maintaining that trust in the supply chain and the integrity of that supply chain, which, in the pandemic, it seemed like a short-term win for businesses. But when things start getting back to normal, people have long memories, and because it weakened that supply chain, the trust was lost, and it's creating longer term issues for some of those businesses now that took kind of really blunt instruments, short term solutions. So forgive me, again, another fairly long question there, but I think it's absolutely critical that we do think about the wider supply chain and don't get lost in just looking at the business and what's immediate for them.
Absolutely. No, brilliant, Colin. We've got a couple of minutes left, so probably time for one more question. Tom, I think I'm going to send this one your way. Feel free to pass it on if you wish. Has the change in the geopolitical environment made exporting to some countries more difficult, i.e. the worsening relationship between the UK and China, the tensions post-Brexit, and US and China? Now, that sounds like it could be quite a long answer, so let's try and keep it down to a couple of minutes if you can, Tom.
I will. The answer is yes, but it's not unique, not remotely unique to the UK. There is a global supply chain squeeze at the moment. And it's, if you look at shipping costs, getting anything out of Shanghai and into Felixstowe is predicated entirely by whether you can get somebody to take the empty containers back. So shipping lines, bunker fuel costs, supply chain squeezes. I think Colin makes a very good point in terms of relationships were certainly tested over the last couple of years throughout the pandemic. And understanding the length, I think Colin made the point, but also the width in terms of how well diversified is your customer base and how well diversified is your supply base. Really exposed strong businesses versus those that weren't necessarily. And also exposed various different countries that exploited that in a time that was very difficult when lots of companies were just trying to stay afloat. So Andrew Bailey put it very, very well last Thursday when he was talking about the inflation issue and the interest rate hike or not, to say it's way too early to unpick, for example, whether the supply chain issues are based because of coronavirus or whether they're based because of Brexit. Now, again, there are mitigants to be able to maintain sustainability from a business perspective. Of course, there have been onward shocks from that, but I would say the overarching issue, yes, there are individual, EU issues, Northern Ireland at the moment, Brexit, coronavirus, but it's not unique to the UK. There is a global supply chain squeeze. There is a global skilled resource squeeze, and that is manifesting itself in all countries rather than any one specific political event that's happened over the last 3 to 4 years.
Could I just add one thing to that, Tom, if you don't mind? There's all these sorts of issues in supply chain and all sorts of areas where I think sometimes people imagine their banks might not be able to help, and they will tend not to ask the question. I would urge people, and particularly SMEs, on any aspect at all, generally of their business overall, but particularly we're talking about trade and your importing, your export, your working capital, take any question to your bank. If you've got a good bank, they might not have the solution for you, but you should have an expectation if they can't give you the solution, they at least can help you find someone that can. Sometimes that can be other clients. So we got a broad network in our client base. So we might know another client who's done something similar. It's very logistic or commercial that a bank wouldn't normally support, but chances are we're going to know someone that can help that. So take any issue that you've got to your bank and talk to them about it. Hopefully they'll be able to help you in some shape or form.
That's terrific, Colin. And I know that you've posted a link there to the International Trade portal in the chat there. So if anybody is watching and wants more information on any of the services that are available, products, feel free to click on that link. And well, that brings us to the end of the session. It's been a great session, a very informative session. Can I take the opportunity just to say a big thank you to Sam Riordan, to Tom Stoddart, and to Colin Walls of Lloyds Banking Group for sharing with us some of the insight into supporting businesses. And a special thank you to Joe, to Mark, and to Christine from MacIntyre, who've been very open with us. I think you'll all agree today, very open with us, giving us a window inside MacIntyre, your experiences of exporting and how you work with the bank. And it's been very much appreciated and very informative. So thank you very much, one and all. Thank you.
Thank you.
Thank you, folks.
Thank you.
Thanks, everybody.
Bye.
Thank you.